Be Wealthy and Smart, episode 812.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about cryptocurrency gaining acceptance under the radar, because you might not be noticing it, but cryptocurrency is exploding right now in a good way all over the world. And I'm going to share with you some articles that came out just this week. And it seems like every single day we get more and more confirmation of the importance that cryptocurrency is playing and the acceptance of cryptocurrency by institutions, private wealth, and individual investors. So I'll be sharing with you some information and articles about that. But before I do, I just want to make a comment about Facebook and the lawsuit that we saw filed this week against Facebook. Facebook was sued by the United States and a group of states, and the FTC sued Facebook for illegal monopoly practices. So this is something that I mentioned on the October Surprises podcast, and it was one of the things that I said the FANGs have facing them. This is now the second lawsuit brought against one of the FANGs, the other being Google. And so I think there's more to come, and I think Facebook is in a lot of trouble, very hot water. So we will see how this does cause a little bit of dampening in the Facebook stock. But then again, a lot of times these lawsuits take years in order to come to any conclusion. So many investors might be ignoring this major situation that has arisen, but I would urge you to be aware of it and just know that these lawsuits are very serious and are out there lurking in the background. All right, so let's talk about cryptocurrencies. One of the things that's happening is that we're seeing the wealthy are getting into cryptocurrencies. We're seeing institutions get in. We're seeing regulators talking about cryptocurrency. We're seeing banks discuss cryptocurrency. We're seeing exchanges, stock exchanges, embrace cryptocurrency. And just this week, we had the first U.S. cryptocurrency ETF start trading. Its symbol is BITW. It's called Bitwise, and it has an index of 10 different cryptocurrencies. Now, I have to say, I am not a fan of this as much as I like cryptocurrency. There's some huge negatives and problems that I see with this very first ETF. I would hope that more ETFs will follow and will make some improvements. But first of all, this is not well diversified. This has 77.8% in Bitcoin, 12.4% in Ethereum, 3.4% in Ripple, 1.5% in Bitcoin Cash, 1.2% in Litecoin, 1.2% in Chainlink, 0.8% in Cardano, 0.7% in EOS, 0.5% in Stellar, and 0.5% in Tezos. So you can see that this is not well diversified. There's 77.8% in Bitcoin alone, and that to me is messed up. An ETF should not be so heavily weighted in any one thing, whether it's a cryptocurrency or anything else. The other thing I don't like about this new ETF is that the fees are extremely high. It's 2.5%, which I think is very, very high. Now, cryptocurrencies are known for having low fees. So for the ETF to go and create a package of cryptocurrencies and put a 2.5% fee on it is outrageous. So I think that there's a couple of major things about this cryptocurrency that I just am not going to support it. That doesn't mean it won't do well. It could take off and do extremely well. We all have to make our own decisions, what our parameters are for our investments. And to me, this does not fit my parameters, just like Bitcoin itself has never fit my investing parameters. But one other cryptocurrency does fit my parameters and is doing extremely well, and I think is the monster that is going to dominate cryptocurrency in the future. One of the exciting pieces of news that came out this week was that a huge elephant was getting into cryptocurrency. And you might not be familiar with the name Standard Chartered Bank. It is a major British bank, and just in the US has $720 billion worth of assets. The news from Standard Chartered Bank this week was that it's partnered with Northern Trust to launch a cryptocurrency custody solution for institutional investors, and they're calling it Zodia. So just a little bit from that article, it says its Zodia custody is going to be operational next year in London, and the bank aims to combine traditional cryptocurrency services with banking expertise to facilitate institutional investors. They will provide custody of Bitcoin, Ethereum, XRP, Litecoin, and Bitcoin Cash at the start, and plans to add more in the future. Standard Chartered outlined the growing interest in cryptocurrencies worldwide. The bank mentioned that crypto assets now represent 0.3% of the world's currency and bank deposits, with an expected annual growth rate of 32%. Despite the growing popularity, institutional investors only account for 9% of the total investment in cryptocurrencies. That was very exciting news, and a lot of very high net worth investors are affiliated with Northern Trust and with Standard Chartered Bank, so you can see that some of the very wealthy are now getting into cryptocurrencies. And why wouldn't they? The returns for this new asset class are astounding. And so far, some of the cryptocurrency assets have done spectacularly better than that. And our favorite cryptocurrency itself is up 148% this year. And for such a nascent asset class, this to me is just the beginning of the growth phase that they're going to experience. You see, the whole market cap for cryptocurrencies right now is $500 billion. That's $500 billion. Well, guess what? Apple is $1 trillion company. So you're telling me that the whole entire cryptocurrency market is worth half of Apple. That's all. And that to me says we are in the very, very early stages of this happening, because everything is going to be digital. Everything is going to be valued in a digital way, and everything is going to be tokenized. And so all of this is going to be put onto the internet and is going to be the internet of value. The way that we transact our payments, the way that we send money, the way that we do our banking, our investing, all of that is going to be added in a digital way. And that's what I'm so excited about. Another piece of news we had this week was in Singapore. A big bank called DBS Bank is the first traditional bank in the world to launch a digital currency exchange. And it says it will allow Bitcoin, Ether, XRP, and Bitcoin Cash to be traded against the yen, US dollar, Singapore, and Hong Kong dollars, and may be in business starting next week. It says the platform is open to institutional as well as elite retail investors. A local cryptocurrency expert said the announcement, which comes amid the ongoing Singapore FinTech Festival, would likely boost perceptions of cryptocurrencies as legitimate investments, which every day they're gaining more and more acceptance and legitimacy. And soon I think we're going to have regulatory clarity that's going to give us 100% legitimacy. And I'll talk more about that in a minute. We're just on the verge of that. The article goes on to say, in addition to allowing trades of cryptocurrency, the DBS Digital Exchange would conduct security token offerings. These are a type of cryptocurrency tied to actual assets, such as real estate, cars, or corporate stock. This means companies from small and medium-sized enterprises to multinational corporations can raise capital by digitizing their financial assets, such as shares in unlisted companies, bonds, and private equity funds. Gupta said the integrated offering was significant because it would include issuance, investing, and trading of securities tokens. Gupta said current cryptocurrency exchanges tend to lack the possibility that being part of a banking group can bring to this activity. He said, "We bring a large origination capability from our capital markets presence. We bring a substantial distribution capability, which includes our own private bank and wealth base, as well as institutional client base. And because we are an established custody house, we've built a lot of capabilities and knowledge and experience in managing the custody function as well. So leveraging the power and strength of DBS Bank allows us to build volume, liquidity, and scale in this exchange in a manner which a lot of other bespoke exchanges find difficult to do. While institutional investors, including financial institutes and market makers, can access the exchange directly, retail investors who have to be accredited investors would have to access it via DBS Vickers Securities or DBS Private Bank. Unlike other digital exchanges, this one will not hold the crypto assets. These will instead be kept with the banking arm of DBS via an institutional-grade custodian. Kenneth Bach, the chief executive at Blockchain Advisory Blocks and a cryptocurrency expert, said it was a significant development given DBS's excellent branding in the region, and the bank's exchange would give the ownership of cryptocurrencies more legitimacy and provide for institutional-grade protection in owning cryptocurrencies. This will improve the cryptocurrency cybersecurity standards to the level of banks, he said. Singapore is known to be on the cutting edge of technology, and so it's not surprising that they would come up with the world's first cryptocurrency exchange. Now you can see how institutions are very interested in getting involved in this asset class, and that's because they see it as a non-correlated asset class to their other assets, and they see the explosive growth rates that are happening in this new trend. Again, this is like being able to invest in the internet back in the early 90s. That's how I see it. We are able to invest in something that's going to be a major part of the economy, just like the internet is today, and it's going to provide major value and major wealth building with all of the new technological innovations that are coming with it. And it's not just London and Singapore that are announcing big deals in cryptocurrency this week. Our own Fidelity here in the United States is talking about holding Bitcoin as collateral for cash loans. This article on Bloomberg says Fidelity Digital Assets will allow its institutional customers to pledge Bitcoin as collateral against cash loans in a partnership with blockchain startup BlockFi. A unit of Boston-based asset manager Fidelity Investments will hold the digital asset and not make loans itself, Tom Jessup, president of Fidelity Digital Assets, said in an interview. The target is Bitcoin investors who want to turn their digital stash into cash without selling, and potential customers include hedge funds, crypto miners, and over-the-counter trading desks. The new service from Fidelity comes after Bitcoin beat its 2017 highest price earlier this month before retreating in recent days. The world's most valuable digital asset has risen 164% this year. Fidelity said institutional investor interest in digital currencies is rising. A survey the asset manager conducted earlier this year found 36% of respondents held crypto in their portfolios. More than 6 out of 10 expressed interest in Bitcoin and other cryptocurrencies, up from 47% in a 2019 survey. It goes on to say crypto is being accepted for more mainstream financial uses, such as Visa credit cards that offer Bitcoin rewards and PayPal Holdings, which allows customers to use the digital asset at the 26 million merchants on its network. All right, so there is Fidelity offering loans to people that have Bitcoin, which again, people have built substantial wealth in Bitcoin. It just happens to have major flaws, in my opinion, of taking up too much energy in order to mine Bitcoin, and also it is terribly slow in processing transactions. You can't have a super slow cryptocurrency be adopted by the world. That's just not going to work. Too many people get in there, it slows it down more and more and more. You need to have something that can settle in seconds and costs very little and doesn't use any energy. And that's what we're investing in. So let's look at that Fidelity survey that they mentioned. This was back in June of 2020. They talked about a third of big institutions own crypto assets already. It said in the US, 27% of institutions, including pension funds, family offices, investment advisors, and digital and traditional hedge funds, said they own digital assets, up from 22% about a year ago. In Europe, 45% of respondents are invested in digital assets. These results confirm a trend we are seeing in the market towards greater interest in and acceptance of digital assets as a new investable asset class, Jessup said. Yes, it is. It is a very exciting new asset class, and institutions, private investors, family offices are in this and getting in every day. We're fortunate to be in very early in this huge evolving trend. When we look at what's going on at the government level, China seems to be the government that is adopting a digital currency the fastest and has put out information that they are ready to come out with a digital currency. I don't think other major currencies are going to be happy to let China get ahead of them. So I think there's going to be a major push by all countries to get their digital currencies together. These are what I've been talking about, the central bank digital currencies, CBDCs, that all countries have been talking about working on, and I think are just about to introduce a digital version of their currencies so that they don't let China get ahead of them in this particular area. We've already heard about the euro working on a digital currency. We've heard about the US working on a digital currency. And we know that digital wallets are mandated in the US by January 1st of 2021. So we're right around the corner from having the government or our US Treasury issue a digital wallet for us. And that will facilitate government payments going forward, whether that's Social Security or whether that's unemployment or whether that's stimulus checks. We're going to have a digital wallet format going forward in order to make that super simple and much less costly to distribute money, as well as keep a record on the blockchain of where those payments went so we don't have all this corruption of dead people receiving stimulus checks and people receiving double checks and all these kinds of things that we've been hearing about. This new way of paying is going to solve all of those issues. And finally, a few days ago, we heard from Secretary Mnuchin, Secretary of the U.S. Treasury, who said that G7 countries discussed cryptocurrencies this week. He said there is strong support across G7 countries. Those are the largest 7 countries. That is the U.S., Canada, France, Germany, Italy, Japan, and the United Kingdom. It's an informal bloc of industrialized democracies. So they want to regulate digital currencies. That's because, again, they're gaining legitimacy and they're going to be used in the future. He said the G7 finance ministers met by video conference and cited strong support on the need to regulate digital currencies. That tells me they believe them to be an important part of our future and that they're acknowledging that cryptocurrencies are about to come onto the world stage in a major way. We've been waiting for clarity of regulation as to whether they're a currency, a commodity, a security. What are they and how do you treat them? That's something that the regulators already gave to Bitcoin and Ethereum, which is why their prices have been able to skyrocket more so than other cryptocurrencies. But once the regulators come out and give regulatory clarity to all cryptocurrencies, then in my opinion, that's going to give them the green light to have their value skyrocket as well. At least to certain ones that have been following with regulations, who have been going along with the Know Your Customer and anti-money laundering regulations. That is holders of cryptocurrency and exchanges and dealers and banks have to know who they're dealing with and make sure they're not dealing with criminals, they're not dealing with money launderers, etc. So as long as they're on the up and up, they have full transparency, they are doing things by the law, I think cryptocurrencies that are doing that already have a very bright future ahead. If you're interested in learning more about this space and want to find out which cryptocurrency I am seeing a lot of parallels to that are similar to Amazon, Apple, and other very successful technology companies, something that is able to dominate its space and scale in a major way, if that's something you're interested in, just click on the link in the show notes and we'll schedule a time to talk. I'll be happy to answer any questions and see if this is a good fit for you. And I want to remind you, we have our holiday review contest going where you can win one of 20 prizes. I'm giving away 10 of my Wealth Heiress books, which was ranked on the list of all-time best wealth books by Book Authority, and you'll get a signed copy from me. And 10 of my Wealthy Mindset Blueprint audio sets, valued at $197. All you need to do is leave a review on iTunes. That will get your name in the drawing one time. And if you've read the Wealth Heiress book and leave a book review on Amazon, that will get your name in the drawing 2 times. And if I draw your name, you win a prize, and I'll announce all the winners on the January 13th podcast. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.